Let us consider an example. Sundry debtors of Messrs. Sunil Brothers amounts to 25,000 and bad debts rupees 3,000. They provide for doubtful debts at the rate of 2%. Past journal entries. And how is this shown in the balance sheet? 25,000, bad debts 3,000. They provide for doubtful debts at the rate of 2%. So what do? If we take method 1, then what is the entry in the first case, past journal entries? For bad debts, it's bad debt account debit to debtors amount of 3,000. First entry for bad debts. Next, they provide for doubtful debts at the rate of 2%. So 2% of what? 25,000. If we keep a working note here, 25,000 minus 3,000 written off gives us 22,000, and at the rate of 2%, provision at the rate of 2% should be 440. This should be the provision. They don't seem to have any old provision. So this bad debts is taken to the profit and loss account debit to bad debts, an amount of 3,000. And for creating the provision, we would say profit and loss account debit to provision for doubtful debts, an amount of 440. Bad debts to debtors, profit and loss to bad debts, and profit and loss account debit to provision for doubtful debts. How is this shown in the balance sheet? This is actually in a way balance sheet. If you take a balance sheet, this is how we would show debtors less bad debts and less provision of 440, giving us 21,560. Another example, if we consider, sundry debtors of Messrs. Shakti Brothers amounts to 1,03,000 and bad debts 3,000. They provide for doubtful debts at the rate of 2%. There is an opening balance of provision amounting to 3,500, past journal entries, and the method. How is this shown in the balance sheet? It's under the first method where bad debt is taken to profit and loss account. Okay, so bad debts are 3,000. Let's pass the entry for that. Bad debt account debit to debtors 3,000. So in the first method, bad debts is directly taken to the profit and loss account to bad debts and not adjusted against provision. They provide for doubtful debts at the rate of 2%. So it's going to be, what is provision amount? Provision is going to be 2% of, what is the debtors we have? 1,03,000 minus 3,000, 2% of 1 lakh. 2% of 1 lakh or 2,000. This is going to be the amount of provision. So what is the entry we pass now? We need a provision of only 2,000 and there is already an amount of old provision of 3,500. So we have extra 1,500 which we will write back provision for doubtful debts debit to profit and loss account. It's 1,500. How is this shown 1 second, we will just prepare the provision for doubtful debt in this case. Provision for doubtful debt, you have an opening balance of 3,500. We are creating a balance of, we are not creating, we have said provision for doubtful debts account debit. We are writing back to profit and loss account 1,500 so that we have a credit balance carried down of 2,000, which is what was needed, what was expected. If this is the case, how would the provision and debtors appear in the balance sheet? On the asset side, we say debtors. How much was the debtors? 1,03,000 less bad debts. How much? 3,000. This is deducted. So you have 1 lakh less provision for doubtful debts. What is the amount? The new provision is what comes here. The balance in the account is the new provision. That is an amount of 2,000. Therefore, we get 98,000. But what has gone to the profit and loss? 3,000 has actually gone to the profit and loss. 1,500 has been written back. Net effect is 1,500 debited to the profit and loss account. Please remember, profit and loss account has been debited with 3,000 and again credited with 1,500 on account of provision for doubtful debts, so that the net debit to profit and loss account was 1,500. If we do the same thing in the second method, sundry debtors amounts to 1,03,000, bad debts 3,000. They provide for doubtful debts 2%. There is an opening balance of provision 3,500, past journal entries and shown. If it's the second method, it is bad debt account debit to debtors. There is no change. This amount is 3,000. So the debtors have now become 1 lakh. What is our provision? 2% on 1 lakh is only 2,000. Now how do we create the provision? This is bad debts plus new provision minus old provision. Bad debts is 3,000, new provision is 2,000, old provision is 3,500, giving us an amount of 1,500. So what is the entry now? The entry would be profit and loss account debit to provision for bad debts, 1,500. So bad debts, yes, and bad debts, sorry, I missed one entry. Profit and loss account debit to provision for doubtful debts, we need to create only 1,500. And what do we do to this bad debt account? This bad debt account is closed by transfer to not profit and loss, but to provision for doubtful debts account debit to bad debts. In the balance sheet, it is shown the same way. 1,03,000 less 3,000 bad debt. So you have 1 lakh less provision of 2,000. New provision being 2,000, giving us 98,000. Let us create the provision for doubtful debts to understand. Provision for doubtful debts. We have a balance brought down of 3,500. Next, provision for doubtful debts account debit to bad debts, we have 3,000. Next, we have profit and loss account debit to provision. Profit and loss account is debited, provision is created by profit and loss account, 1,500. Therefore, you have 5,000 here and balance carried down is an amount of 2000. This 2000 is what is shown in the balance sheet as a deduction from 1 lakh from net debtors.